Yes, sir. So the last aspect is left. Few theory questions they may ask you. Okay, we'll discuss about this theory questions. And before we discuss about the theory question, we discussed about the what is that called? A decommissioning liability in the previous session, and we discussed about the revaluation model. Okay, just we want to have a one point I wanted to tell you. See now this decommissioning liability. Okay, I have got a PPE. The PPE will earn the cash flow. PP is associated with the decommissioning liability, which will result in the negative cash flow. This is a positive cash flow. This is a negative cash flow. Now, say positive, I am going to get the, say for example, present value of all the future cash flows of this is 100. And this in future I need to pay. Its present value is 20. Now, see, this I cannot separate it. That means whoever want to buy, who want to get this, they have to pay this. So overall basis, if I look, I need to, if I sell this right now, somebody has to pay me 80 rupees. Now, chalo, for example, the cost increases to say 30 rupees. We realize after some time it is not 20, it is 30. Now, how much somebody will pay me? Because it is a mistake, it is not 20, it is 30. Somebody will pay me 70. So, your changes in the decommissioning liability has got an impact on overall valuation of the asset, considering liability. But if you see this, whether this is 20 or 30, whether the present value of future cash flow of what that asset is going to give you, is it going to change? No. That's why they say that, look, if you follow discounted cash flow method to value your assets, this will never change irrespective of whatever it is going to give you. And in FR, we discussed that the asset I will show on the asset side, decommissioning liability I will show on the liability side. That's why if somebody discounts and say 100 rupees is the fair value and deducts 20, because they say, look sir, you cannot get 100 unless somebody takes over this 20 also. So your value of the asset is 80. That's the reason whatever valuation they have taken here, we just add it back to get the gross value of this particular fair value of this. That's the logic. Okay, for this they would have used a discounted cash flow method, not the market value method. Anyhow, we need not go more deeper, just understand why we are adding impact. Now let us talk about some theory question. Very few theory questions are there. So since you have understood now Ind AS 16 very well, you should be able to answer me. Now X Limited has a machinery which got damaged due to fire on 31st of January 2011. The carrying amount of the machinery is 1 lakh. So 1 lakh is gone. What entry will pass? Bank. Who is going to give you bank? P&L. It is a loss. Now destroyed. Asset got destroyed. Who is going to give me anything? Nothing. So X sold the damaged returns for scrap. Then you say the bank account debit to PPE, P&L to PPE. Now X Limited has got an insurance claim also against the damage. And as on 31st March 2011, the compensation proceeds are still in process, but insurance confirmed the claim. They said, look, we will give you 50,000 rupees claim. Confirm. I am definitely going to get. Now, how should I account this transaction? In the new scheme, they said, determine the accounting of the above two transaction. What entry I should be passing? Huh? Means 50,000 credit. Huh? No, my question is, will I mix this with this? I have got a loss on one side. I am going to receive some money. Will I mix it and do net accounting, or I will do two separate accounting? Understood my question? No? If you do net accounting, your net loss is only 40,000 rupees. Out of 90, 50 recovered. No. If you do gross accounting, you show on the debit side, say I have made 90,000 loss. Credit side, I am getting 50,000 insurance income. Which one you should do? Okay, let us see what Ind AS 16 says. It says that Ind AS 16, impairment loss or losses on the PPE and related claims for the compensation from the third parties are two separate economic events. Why you want to mix them and show net loss is so much? Now, you might have done, okay, that may not be receivable, God knows. It could have happened, so it might have been a contingent asset for you. So, if I permit you to do this, no, you will always say that it is receivable because you want to show that, okay, I have claimed insurance, my loss is less. So, I will apply contingent asset related conditions for that. Loss is loss, finish. So, what you need to do, write off the carrying amount, provide loss for 90,000. And as per Ind AS 37, whenever that, right now it's the contingent asset. The moment it is receivable, you recognize, then you recognize a contingent asset as 50,000. So for our understanding, not required in the examination, this is what you need to write, if at all this question comes. Bank loss to PP and insurance claim receivable to insurance P&L. Are you clear? A simple question, not much highly probable question. This question can be a probable question. It has come in your RTP and now they have updated. See, I have written here. NSB means previously it was not there in your study material. Now, but previously it was there in the RTP. That's why no, I don't want to discuss all the RTPs and MTPs of the old syllabus. Because if it was really required, they would have updated in the study material. They updated only 32 questions. Let us focus on that right now, top priority. Other questions I will share with you. Now, entity has got the following items of PPE. Property A is there. What it is? It is a vacant land on which it wants to construct one headquarter. Property B, a plot of land that operates as a landfill. That means any construction they do, no, they dump that because, where you will put this sand? People will shout on you. So you have got your own dump yard. Wherever construction, digging and all you do, no, that sand you go and fill that. C is a plot of land on which your administrative headquarters is already built. It is like a land and building. It is not land. Property D, a land on which a direct sale office is built. Oh, one is land and head office, and the land is land with the sales. Sales, maybe retail storeroom or whatever it is. You have got property E1 to E10. They are the separate retail outlets, like retail shops. This is sales office. Retail shop means, okay, you have got showrooms. Ola, they have got one office. Then they have got small showrooms. Equipment A is there. It's a computer system at its headquarters, and direct sales officers are integrated with the point of sale terminal. That means all your sales officers has got one system, but it's a terminal only. It's a dumb client system. The headquarter server is equipment A, and equipment B is the point of system at each of the retail terminal. Like you go to Super Bazaar, more they will do the billing. Where the server is located? Do you think in there only? No, it's the point of terminal there. They enter it, but more must be having one retail or headquarter office. There the central server is located, no, not at the individual, is only an entry point there. You have got of furniture and fixtures in the office, also as in the sales office. You have got of the shop, furniture and fittings in the retail outlets. Highly probable question. Very nice question. Now they are asking you only one simple thing. How many classes of property, plant and equipment you should disclose now? Can you club something? Or should you disclose separately? Because you give in the face of the P&L account only one head called PPE. Then you give the note number 22. If I go to the note number 22, I will get one breakup there. Now that breakup must be your schedule 3 breakup only, because again PPE breakup they have given you schedule 3. I didn't discuss that. You are going to come across like PP is one head. That PP, what all the classes should come, they have told. Now in that land means, will you club all the land of everything, or what type of land you will show? You say computer. How many classes you will say? Whether A and B you will club separately or show it separately. Furniture and fittings when you show. Because see, problem, why do I need this? Because my subsequent measurement depends upon the class. I can follow cost model for one class, revaluation model for another class. But in that class, everything should be same. Now I may play here. Land, one land I will go for a revaluation model. Another land I may go for a cost model. But can I do that? Nice question. Now, in your scheme, what they asked, determine the class of property. You see the difference. Determine means you have to, it's very clear there. There is no confusion. See, in advice, you have got options. You have to tell what option to be chosen, what is the implication of this, how it is going to happen if you choose this. That's what you need to explain in advice. In determine, you don't have any confusions as such. You have to be sure shot, like you are determined to become chartered accountant. Is there any confusion? Should I do MBA or CA? You need an advice. Determines means it's known. This is what is going to happen. Followed, no? Examine means confusion may not be there, but you need to figure out what all the components are there. Okay, now tell me, students, what I can plot. Is A and B, see, I have got land here. A, B, C, D. All are land. Vacant plot, 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 plot. Can I club or all separate? Which all separate? Which all I can separate and which I can show it together? Sorry? A and B separate and C and D? What about E1 to E10? Now tell me, okay, I will start from here. 1, 2, 3, 4, 5. In the notes to accounts, will you show 1, 2, 3, 4, 5? How many subclasses you will show? Classes you will show? 1? No, definitely no, because you will say, sir, property and B, so definitely different. Will you show 2? Which all class you will show? One, two, you will club together. You will show separately. This is separate. Yes. Is this separate? C. Will you mix it A or B? 1 or 2? Now, first of all, what is the definition of a class? Class means, okay, so if I take you to the class means the grouping based on their use, what it is meant for, what you can use it for. A vacant land versus landfill, different uses. So I can say that all the 3 are one class. Because what is the use? See, I already have got one on land, one building is there. Whether that building is the head office or sales office, different story. But that land is already used. This land I can use it for any purpose. I can use for parking place also. This land only for landfill only I can use. I cannot use for any other thing. So I can say up to here I can have 3 classes. Agree? What about your equipment A and B? 1. You can club it into 1 because both are integrated. No, both have got the same functions. Furniture and fittings, administrative office and sales office. Furniture and fittings in the retail outlets. Okay, so the furniture and fittings which is, okay, you go to one mobile showroom, you have got a chair there. Which type of chair? One round color, one long chair is there. And they have got one table type of thing, glass thing. Can I bring it to office and ask you to sit with this and work? No, what you expect? You expect a chair like this, a table like this. Now, if you go to the retail out store, will you find this type of chair and table there for the salesman? Both are furniture, but depending upon type, it may be different. So that is what you need to figure out. Okay, yeah. We'll say that property A, it's the land without building, different to a nature with the building. So you can have to show separately. And furthermore, it is land operated as a landfill site, which is totally different from a vacant land. This is also separately. But C to E, you can apply your judgment. Now it makes sense to show it as a single, or you can describe, you can view it as a separate, diplomatic answer. Equipment A and B, generally you will have a single class because both are all computers, whether you use here or there. Now furniture of head office and the retail shop is again, if generally they are sufficiently different, that's why you can classify it as a two separate class. Followed, no? So all this 10 might result into 4 in the balance sheet. Venus Limited is a large manufacturing group. It owns considerable number of industrial buildings such as factories, warehouse, office building in several capital cities. Industrial buildings are located in the industrial zones. Office buildings are located in the cities, obviously. Now management wants to apply Ind AS 16 revaluation model to subsequent measurement to the office building, but want historical cost to the industrial building. Is this acceptable? In the new study material, they say analyze. Means look into the component now. There are two components involved. Office building and this. Accounting treatment, is it correct? Is it okay? Crux of the story is, on office building, they want to apply revaluation model because it is in the city. Industrial building is somewhere else inside. What price you get for that land, building and all. They wanted to apply cost model. Office is in the center of heart of the city, no? I want to apply revaluation. Can I do that? Is it a different, that's what. Is it a different class? This is what you should be thinking. Now, what do you mean by class? On the use. So, is the use of both the land or properties is same? Office building, okay. Instead of you sitting in the office, I'll take you to the factory and you sit there and work there. Will you do that? You expect, no, say, sir, official work means office building. I cannot call the person, come to my factory to meet me. Meeting has to happen, I will call in the office. I need an office there. Otherwise, why first of all, I need to have office in the city there. If both are same, then I can sit there and do the work, no? Huh? Sorry? Then that means purpose is different, no? Objective is different to set up this, no? You have got a different use now. So, you can't, just now we discussed, now how many classes? Which one? But if you see here, we said no, apply the judgment. You have to look into what type of, see again, it is not a rocket science subject. So you have to go into the substance matter. First of all, you should know, that's why they said analyze. And whenever they say analyze, you have to start with the definitions. What is Ind AS says? They say it will permit class by class. Now question comes, what is class? Different characteristics of the PPE in terms of their function, nature, location, use, etc. You can classify into PPE. Different methods of measurement model can be applied, and all the properties should be at the whatever. If you do revaluation for one, all should be one. One industrial site cost, there another in Assam, another industrial site at revaluation. That I will not permit you, because by the very nature, industrial site here in Karnataka or in Assam is same. Whatever its function wise, whatever it is. So in the given case, so analyze means generally you will have start explaining the theory and say application. The office building can be clearly distinguished with the industrial building. So both are separate classes. Yes, you can apply industrial and this. Clear? Yes, very few questions, okay. So how many questions? Your third question, this is the fourth question. Entity X has got a warehouse which is closer to a factory of entity Y. Say I am from Karnataka. I have got one warehouse in Maharashtra. Now that is next to Y's building. Now vice versa. That means Y's factory, Y has got a factory in office in Maharashtra. His warehouse is next to my factory building. Now the factories are located in the same vicinity, next to each other. Or maybe it's not Maharashtra and Karnataka, within the same. So we are in one industrial location. I didn't get to see what happened. No, initially when they applied, two people applied for two different plots. He applied in one place here, one place there. I applied one place here, one place next to him. Now I found, like, see, I have to manufacture here. Understood? No problem. Manufacture here, take it and store it here. He has to manufacture here, come and store it here. And both are located in the same SEZ or industrial location. Now both agree to exchange their warehouse. Carrying value of the warehouse is 1 lakh and fair value is 1,25,000. This is X. It exchanges the warehouse with the Y with the fair value is 1,20,000. Y's fair value is 1,20,000. It receives cash amounting to 5,000 now. Now how should you account this exchange? What type of transaction it is? Barter transaction. So how you are going to account it? So what entry X is going to pass? What is the accounting entry X is going to pass? Warehouse of Y to warehouse of X. At what value? Okay, at what value warehouse of X goes? 1 lakh. The book value of this. Now question comes, at what value of Y comes? Sorry? Both will receive, and same ulta is going to happen with Y also. Similar entry Y is also going to pass. No? For both of them, Ind AS is applicable. Y will say warehouse of X account debit to warehouse of Y. X will say warehouse of Y is equal to warehouse of X. 1,25,000. First, what is the rule? Whenever barter happens, what is the very first rule you need to apply? Very first rule. Is there a commercial substance? Then if you see the fair values are it should be substantially different. Now you exchange warehouse for a jet. Then it comes, see, probability of this question is low because in RTP question, not updated in the study material, but in RTP, one of the question is sitting like this. Suddenly out of nowhere, they may ask you this question. So what do you need to explain now? Now that configuration you need to explain. You have to say that, look, Ind AS 16 says, when you exchange one asset for another non-monetary asset, you have to measure them at a fair value unless it lacks commercial substance or you cannot measure the fair value. This condition failed because you can measure the fair value easily. Either one, both you should not be able to measure it. Yes, both you are able to measure. But a question comes, is it a commercial substance? Now, what is the definition of commercial substance? You should explain that. An exchange has got a commercial substance if the configuration, that the timing, risk, amount, etc. of the cash flows that the asset differs from the asset transferred. Arre Baba, what you exchange is the asset. What is that called? Or because of this warehouse, did your entity's operation, entity specific value did you change? You offered your private house in some Delhi against this warehouse. This warehouse, maybe both are same fair value. That house is 5 cents. 1 crore is the value in Delhi. Next to your house, warehouse is there. It is 20 cents. Value is 1 crore here. We exchanged. Is it having a commercial substance? No. But if you see, with my house in Delhi, what my business operation is going to get? Nothing. But the moment in exchange of that house, the warehouse when I get, I get an entity specific value. My operations are going to expand here. So you can't simply say, oh sir, same thing you exchanged. But did it add anything to me? Yes, if that is the case, anyone, it is OR condition. If any condition happens, if the differences are significant, then it has got a commercial substance. So in the given case, the transaction lacks commercial substance because the question is very silent. So they have assumed. Maybe in the exam they may add more masala to it, that this is the cash flow we used to get earlier, this is what happened. So because both are located in the same vicinity. If it is different vicinity, you could have assumed. So entity will has to recognize at what value? Book value. So warehouse X being 1 lakh existing warehouse and 5,000 received will be deducted from the cost of the PPE because you paid 5,000. Therefore, warehouse of entity Y is recognized at a carrying value of 95,000 in the books of entity X. So your accounting entry is what? Warehouse of Y to warehouse of X. How much? 1 lakh. Since he pays you cash, bank account 5, this becomes 95. They didn't ask me the entry in their books. Nice. Okay, so now we'll move on to one more MTP question. Again, priority of these two questions are low, but there is a beauty of this question. That's why I am discussing this. Otherwise, I would have skipped these two questions. Followed, no? I would have given you for self-study, because if you go here, I will give you more. Okay, in this chapter you don't have, see, part 2 questions. There are so many questions that you studied out of your academic thing. But this is a very nice question. You see, understand this. Given the decreased revenue, and this question they may ask you in audit, because this seems has got a flavor of an audit. Given the, and understand it, very nice. I want you to open up for this question. Given the decreased revenue in the financial year 21-22, revenue fell down. Now what management did now? One meeting happened. Investors are going to catch my neck. Management of PQ taken is keen to identify ways to reduce the overall impact of the P&L. Now accounting something I need to look for, no. Now a consultant suggested that they could explore changing the basis of depreciation from SLM to hours in use, but not entirely sure if this is permitted. They said that, look sir, why you are doing straight line method? Under straight line method, you are charging more depreciation. Why don't you shift charging depreciation hours of use? How many hours you use, that much hours you charge. Unit of production method, you have got, no? You have to estimate the number of units. There were different estimative methods are there. And can you shift from one method to another? Is it a prospective application or retrospective application? Huh? Did one problem where we shifted from SLM to WDV? It's a change in the method. So it's not a change in the policy, it's a change in estimate. So if I change the depreciation method from WDV or SLM into something else, it is a change in the estimate, not a policy. So I need a prospective. So management thought, okay, retrospective means all history have to, you know, to give the impact prior to now effect. So best change the method. No, you charge less depreciation. Annual depreciation would be 25 lakhs using SLM, 7 lakhs using new method. Very fine. Straight away my profit is up. No, let auditor come and ask. I will tell, look, my unit of production method or unit of hour method is far better than SLM. There is a difference is significant. Yes, this whatever difference you find is very nice, big amount. Now, what are the considerations in determining whether the change in the depreciation methodology is appropriate and how this change should be accounted for? Very beautiful question. New generation question. A typical question for an auditor actually. Because this is what happens. This is what they do. Now, what are the factors you consider when you want to change the depreciation methodology? What is permitted by law? What is happening in the real life? Okay, there are some conditions we can write. Very good, nice. Now that is okay. My favorite part comes now. Given the risk of charging the lower depreciation per annum and the possibility that the asset will be depreciated over a longer than otherwise, so provided you may distribute dividend also now. And I explained you previously, if you don't charge depreciation, one day your balance sheet will become useless there. You have taken out all the money out of the balance sheet. Now, what are the safeguards do you suggest in order to ensure that the compliance with the relevant standards and Ind AS in its framework? How can you protect? Yeah, somebody may do this. I loved it. I didn't give. That's why no. Previously, I put it as a part 2 because some MTP once upon a time they discussed in November 21. Then I thought, okay, let me discuss this in the class because it's a beautiful question if you appreciate it. Now tell me, students, what is the safeguard for you? See, they will convince you now. They will say, no, sir, I am going to change only. Will you qualify your audit report? They say, they prove it also. Sir, this is better method. But you know their intention. You will ask only one question, sir, if this was the better method, why didn't you change 2 years back? Why are you insisting now? I clearly see one relationship. You are changing now because there is one loss to you. You want to uplift your profits. Now, is there a safeguard for me as an auditor? Okay. The safeguard is impairment testing. See, the moment you charge less depreciation, what's going to happen? Book value will be high. Go for impairment testing, check the recoverable amount, present value of the future cash flows versus the fair value. Differential charge to P&L, no? If you have restated your asset over a period of time, in the form of impairment I will take. The moment it will go to P&L, again one reserve comes into picture. Nice question. Yes. So, consideration for the change in depreciation, it should reflect the pattern. Method should be applied, shall be reviewed at least in every financial year. Okay, consumption of the future economic benefits should be changed. Blah, blah, blah story. You read it, practice it. Now, what is the accounting procedure? It should be accounted as a change in the estimate. So, hours in use method relates the amount of periodic depreciation charge only to one of the above two factors, extent of usage reflected by the number of hours. This method may therefore be appropriate as per Ind AS. Okay, that means Ind AS fine. Consultant said, please check whether Ind AS permits. See, Ind AS says, look, why you have to charge depreciation? Because for the wear and tear, usage, passage of time and all. Now, if you are using by number of hours method, that's also fine because the more hours you use, more wear and tear is going to happen. You have not used much. Charge something minimum for time, but you can actually get more life, correct? No, you're not using, your life will get extended. That's fine, you can do it. So, determination account is not an accounting policy, so you have to apply prospectively. Now, the safeguard for you, because of this, you assess for the impairment. So, if it is impaired, then charge it to P&L account, finish. As an auditor, my job is done. I have protected the interest of the investors. So, this is all about your PPE part. I hope you are very clear, conceptually, clear about the concepts. See, hardly 5 or 6 theoretical questions and 27 practical questions. In that 27, some are understanding only. Very few are questions which you need thoroughly practice. Focus on that one. Again, revision time, don't focus on that. 3 to 4 times that decommissioning liability part and all, that you have to solve.